Smarter from Secrets, the channel for learning about trading and investing. Welcome to a brand new episode of Markets Tomorrow, where we do the technical analysis in a simplified way and look at what happened in the markets today and how we can look for a better trade plan tomorrow. This is for October 6th, Wednesday, 2021. If you are not subscribed, please subscribe. Share to friends so that they can benefit from it. And it means a lot to us. So what a day, no? Just 3 days and 400 points bounce. Today also there was 130 plus points got moved, and 18k once again seems to be really close by. Banks are facing resistance. There is an RBI policy on the Friday. So let's see in detail what happened today and what can we conclude from that, right? So as usual, we will be looking at the pre-market analysis for the October 6th, that's 2021, based on all of these parameters that we see on the left side. On the charts, we will be seeing the chart slides, and then we will have also in the slides following the descriptions in the details that we talked. Right? In addition, on the right side you see additional analysis is done the opening this volatility, institutional participation, and global cues, and then graphics and actionals. Right. So the price action, if you look back, we have the charts in the slides as I said before. So the Nifty shot up another 1% and closed clean, right? Just about immediate resistance, right? So 1% is 130 plus points, right? BANKNIFTY shot up 0.5%. It closed green, but no, it is facing resistance. It's just below an immediate resistance one. You see that in the charts. And both indices, the intraday price action began with a flat node or a downside in BANKNIFTY, but then it shot up after 12, trending upwards, and then it did a bit more, right? So both indices now has a support from the 20-moving average on the bond Japan median, and that is where it has climbed up in the last 2 days. This is where the charts, you can see that it's a wide range green bullish candle that formed today. 3 days, 400 near 387 points. Right side BANKNIFTY, you see 3 days following a hammer, which is following again a large big doji, but the big side shows the bull presence. The bulls are buying it desperately. Alright, that's what's happening. So intraday action, if you see, it was down slightly on the Nifty and then consolidated. It was down slightly on the BANKNIFTY, consolidated, right? Then it shot up after the low, right? Trending fully up. That's the intraday price action on 15-minute trend, if you see. Support resistances, if you see, you can see that 17,950 to the previous resistance will be the first level, and then we have 18,000, which is very close by 3 points, and that's a rounding number, and above we have 18,350, which is Fibonacci projections. Downside, you can see that it's taken out the resistance near to 17,800, right? And below that, if it support seems to be there at 17,600 and 650 that range, and if that slips, it's having supporting at 17,350, 450 levels, and if that slips 250, left 17,250, and then the Fibonacci retracement level of 17,000 to 150 left range. Right side, you see the BANKNIFTY. You can see that the immediate resistance will be 38,350, is the previous all-time high. So there is also resistance just about two more resistances above that. You have 37,900 level also. There is resistance, that is where it has got stuck up. Right? 38 has to be conquered first, and then above that you have 3830, yeah. So above that is what, 38,000. This is 38,000 mark, and then we have 38,350 is the previous all-time high, and 38,800, which is the projection level of Fibonacci, right? So the immediate resistance that it need to take out would be 37,800 band. Not this area would have given supports downside. So the previous support that had taken 37,400, 300 that range, and where it bounced back previously on Friday on 36,900 to 37,100 that range. So this is a support, and downside if it skips, you have Fibonacci retracement level 36,300 to 36,500. So this is support, and then you have resistances again. Previous place where it bounces as another support. The previous place that it bounced today is another resistance, another support, and then top side you have two supports as well. Two resistances like we mentioned before. So let's leave the momentum and the divergences. Momentum is intact, which you can see in the Nifty, but there is a bullish momentum divergence, which can pull up the market once again upwards. Bank Nifty right side, if you see on the weekly, you have a bullish reverse divergence, which can take it again to all-time high, as per if the momentum works out, right. Both are in progress. The weekly also is in progress. On the left side, you see Nifty daily also is in progress, and otherwise, Bank Nifty is resisting actually. Bank Nifty daily momentum, if you see, it is still resisting. It is not gone to the bullish zone. So there is some kind of resistance that you are seeing there. So once that is taken out, Bank Nifty also would be moving from sideways to. But yeah, it's good. The fact that both indices have some kind of momentum that is work in progress, right? The trend indicators, if you see, you can see that the ADX is in the bullish zones. Crossover happened yesterday. Right on the right side, Bank Nifty also the crossover has happened in the bullish zones, but you can see that the strength of the index ADX is dropping. Strength of the index ADX is dropping. Now the volatility in India is again, it's cooling off like anything. Right? It's almost 13% now. It has cooled off from the top of 19 levels, right? Now it is close near to 16.39, 16.4 levels, and black volatility we see is 15.7, and then 31.7 is the black volatility percentile, which is yet to go further up for the option sellers to really benefit from. Open interest analysis, if you see Nifty, left side you have seen Nifty, right side the green indicates the put, the call writing, and the put writing is indicated by the red. So Nifty, as per that, 17,600 is where the supports. Highest put writing is 17,700 after that, and 18,000 would have resistance, and then 17,800 also has got good resistance. So 1.03 is the put call ratio, and futures open interest is showing it's a long build up that happened. So it's already at 17,800 levels, and then it's hardly 200 points to the 18K big mark. So there could be a good resistance there, but the charts, both of them, yeah, that's what is this chart is showing. Right, left side, you can see this 18,000. So the Bank Nifty, you can see that 37,500 and 37,700 is having good supports. These two long bars. So overall, the chart is more bullish than Bank Nifty. If you see the open interest graph charts, and resistance is at 38,000 and 39,500. It's quite far away, right? So long build up is seen there in the futures data also in Bank Nifty, and 0.9 is also very close to bullish. So 1.7 is also good. Call ratio is good. So overall, open interest is bullish. Sectoral performance, if you see IT sector, it bounced back again 1% up, right? It has been doing that from natural retracement levels, and then earlier there was several days of correction that happened. 7.5% of correction happened. Though it's still moving, but the momentum has to catch up. It has to move back. It is going to slip to the side. It doesn't move back. We'll wait for that. Metal goes flat. There's an inverse hammer that is formed. There is some kind of momentum resistance that is there. We have to wait for the momentum to catch up. Stay away from that till that. Auto 0.5% up. Momentum is bullish already, and reverse divergence is also there bullish. It can take it up. Right? It's work in progress. But the problem is there is a resistance W pattern, double bottom breakout resistance is there. So you have to wait for that resistance in the index that is seen there to be taken out before you add the stocks in the auto. Okay? Because it could face resistance and then fall down again. So metal, IT, autos, wait, pharma 0.5 closing red. Today it's up but closing red. Okay? Momentum is in the bull zones. Probably range should be happening. So if the range should be happening, the momentum is hitting the 60, then it is risen above the 60 and it is coming back to 60, then means there is a support, and that's the time to pick up the stocks. Pharma, probably you can look for the stocks. So it's bullish on the momentum perspective, but candlesticks are kind of consolidating. FMCG closed flat, it has slipped in the momentum and let it wait. Right? It is consolidating basically. A small body. 8 days of correction happened earlier, so the FMCG has lost the momentum since many days. Now, reality gave up 2% today, nearly 1.7% or something. It's closing red after 30% of move in 5 days that happened. Big breakout what happened. But the thing is, there is multiple bullish reverse momentum divergences that can be seen on the reality daily time frame. So that means it can definitely, it is just retracing slightly and then it is going to go. Remember that there is a cup and handle weekly pattern, which is very powerful. And let's raise by 30% of more happen. It can go further again, right? It's a good chart pattern, chart structure, price structure is seen in the sectors. So reality is bullish, and Pharma is also kind of bullish when momentum was building. Others are all sideways, so got to wait for the IT, metal, auto, and FMCG to catch up. Now, institutional participation has been interesting today. Fyers again went back to the selling mode. They took double of what they bought yesterday. Right, you can see that 1,915 crores have been sold, but for some reason the DIs have gone bullish today. Yesterday also slightly bullish there, right? So there is, yeah. So it is a little worry when FIs are selling big, right? So, and you can see that the dollar on the left side again, on the right side you can the dollar index, which is short up from the W pattern, double bottom, major resistance zone, and then heading towards another resistance, phase resistance, and then dip slightly. But today it again started moving, strengthening more, and so the rupee also is weakening, and USD and the currency pair also you can see that it has broken out of the major resistance zone, and then it is heading to the channel top, which is around 74.5 kind of level. So 75 is much beyond outside of the channel. Probably it may not hit. It may, yeah, it's bullish because last day, the other day we showed that there is a range shift in the momentum downside. You can see that this RSI momentum is having range shift, and then it has come down and it is bouncing up. So there is a likelihood that it can go up to 75, face some resistance, and then come back to the same channel, right? Because there is a big up move that has happened for this last multiple weeks. You can see. So dollar strengthening with me is going down. Oil, that's a sad story. Like it's 78 levels crude oil, and that's not good for our country. And dollar is also shooting, which making matters worse, right, for the economy. Gold, as usual, slowly strengthening. It is facing tough resistance at this major support zone. It is attempting multiple times to climb above that or be inside that. So every time it gets kicked down, because the dollar is probably causing the reason for that. So, and the US markets, you can see that some flat and some kind of bearish moves is there. There is some bearish move in the US markets. But it's not clear at this point in time. We'll have to check pre-market how the US markets and the European markets. So another interesting scenes there, except that Dow Jones is seen at 300 points down, but since the Nasdaq is seeing green, that should not be a massive now. But yeah, as I said, pre-market it has to be analyzed again. No actionables remains the same. Tata Power is doing excellent. Big breakout moves are happening since last several days that continue to be on a actionable that can be done. And left side you have the Aditya Birla fashion, which is also a good channel movement. Both of them have got great resistance, good volumes, and trend indicators are all bullish. So that's are two things that can be so basically swing and not in trend. Yep, just to wrap up, cautious bullishness remains in the short term. My view, my personal view on both yesterday as well, it is the same. There is cautiousness because of the reason that because the reason that the FIs are this is wrong actually. FIs are not back in buying mode, selling mode actually. It's a mistake to correct that. So FIs sold today around 2,000 crores, right? So that's not encouraging. US markets are slightly bearish yesterday also. Singapore is also indicated some bearish in the morning, but somehow without the FIs buying happening today, we managed to perform well today for some reason. There is an RBI policy uncertainty there on Friday. Oil prices are surging, dollar is heading. So all these bearish factors. That's why I'm cautious. But I can't help but being bullish because there is a reverse divergence on the charts. Both indices having that. BANKNIFTY has it on the weekly, Nifty on the daily. Trend indicators are positive and showing bullish after the bounce. Good 3 days of move, 400 points move has happened, which has pulled up almost 13% in the last 3-4 days. Every dip is getting bought. So that bullish presence makes me be nothing but bullish. But I am cautious because for all this is down. Now at the end, volatility, is forming new ranges as I say every day, from 19 to 15 probably, or 20 to 15. So that kind of range formation is happening. So since it has cooled down now to 16, it may find some support. It may be reverting back from 15 to again back to 19 levels. So that dagger positive strategy can work out, right? But it is a new high range and not the 11, 12 kind of ranges that we had previously where there was no premiums, right? No premiums are good, but the choppiness is always there. But right? So last 3 days, anyway, we have trended up moves. It is happening, which is good. So in general, these are general current spreads, ratio spreads, and iron flies, tend to do good at this kind of fixed levels, right? So plan your trades accordingly. Hope it helps understand what happened in the markets today and how we analyze it based on different parameters. Accordingly, you can take your own view and your own analysis and stock picks based on how it is shown me doing it for myself, right? So if you like it, hit the like button and share it to all, and so that all can benefit. It means a lot to us. Thanks a lot for watching. Happy trading and happy learning. Bye.